Welcome everybody to a new video of Tradomics. This episode is called the Magnificent Seven, and of course we will talk about the seven golden stocks in the Nasdaq. We will always analyze the situation from a cyclical perspective so that you will be aware about the possibilities to have a downtrend on an uptrend before the earnings and also triggered by the earnings. So stay tuned. And if you wanna watch more regarding other stocks, subscribe to our channel to be aware of the latest analysis issued on the US Stocks Exchange. Let's start with Microsoft. We issued the analysis back a couple of weeks ago, in which we were forecasting the prosecution of the uptrend, given that with this upward yearly cycle that was broken with this candle after only 82 bars, we would have had a prosecution to the upside, at least for its minimum duration 190 days, and in the best case scenario up to 338 days. Now, regarding the situation, especially at which point in time we are with the candle made on the 5th of July 2024, we have 244 bars. Therefore, we have already the necessary and sufficient condition to close a T plus 5. Therefore, if from this stop we will start having a harsh retracement, we could say that this will be the beginning of a T plus 5. Now, keep this in the back of your mind because you have to be aware about the situation, but let's also focus on the smaller cycles. So looking at the reversals here, we have had the first 6-month cycle divided in the first T plus 3 month cycle and the second T plus 3, so the second 3-month cycle. The sum of these two has given a T plus 4. So basically a 6 months upward cycle. Now, if we forecast the same setting as we have had in the first part of the year, what we can expect would be to have the first T plus 3 divided in first monthly cycle and second monthly cycle, then beginning of a T plus 3, but then return back to the upside in order to close with the end of the T plus 3, the second T plus 4, and therefore potentially the T plus 5. So what are we doing in terms of downward cycle? Because we always have to study it in parallel, as they represent the same flip or the other flip of the coin. So here we remove the arrows. Analysis was correct, and now we have potentially the beginning of a T plus 3. I say that this is a potential beginning of a T plus 3 because if this will be a T plus 3, then we will have we need a situation where the downward or the downtrend has to continue, so we don't have to go back to the stop at least for a T plus 1, so 2 degrees less, and therefore we will need at least 13 bars below the stop. Of course, the sooner we will go back to the top once completed, the more time we will have to proceed with the rally. But let's see what is going to happen. Even because now we have, as for the last weekly cycle, a situation in which we have 8 days. So this is the last weekly cycle. So therefore, for the beginning of the new week, we might expect a return back to the area around $460, $462, and then we have to see whether we will go back to the top or we will start having another retracement. If we go back to the top, then and we will not have 13 bars, then this will not be the new T+3. Actually, we have time to go back to the top before starting a new T+3. Yes, of course, we have 73 bars, and we can extend also the beginning of the T+3 up to 89 days. Therefore, we can even go beyond the earnings um, and continue with the old cycle in place. So this would be 89 bars. The only thing is that this is not the main way or the principal one, because we have had the T+2 here, and now we have closed the T+2. So this downtrend is already sufficient to start a T+2, not a T+3. Therefore, returning in the next week back to the top will be possible, but not the statistically speaking, not the main possibility or the main chance. Also, we are after this T+2, we are closing another T+2, but therefore we need to close a T+3. Therefore, we need at least a weekly cycle that needs to be negative. So we need a cycle of this kind, at least 3-4 days red candles to close the T+3. So for the beginning of the next week, even if we have possibilities to go back to the tops, we can forecast more downtrend rather than uptrend. Of course, if the earnings will be, so the earnings will be a triggering point then to begin a new T+3 and going back to the tops. So therefore, we will have a situation to have the first T+3 and the second T+3. And if that will be the case, then Microsoft can extend the rally up to 89 bars. So therefore, we can expect the continuation of the uptrend until the 7th of November 2024. But as said, remember that in the back of your mind, you have to remember the possibility that having already 244 bars, if they want, they can start the beginning of a T+5, and the beginning of a T+5 can lead more sustained downtrend, and we have also to go below, for example, the first this first price level at $404.51, and therefore we will have also the second one. And this will allow also to close this T+5. In terms of duration regarding the downward cycle here, the T+5 has reached 198 bars. Therefore, we might have also this possibility as well. Okay, so that's the situation on Microsoft analysis. The last analysis was correct. Here we have the, basically the update of the chart. And let's move to the next one. Here we have the situation on Tesla. As for the last analysis that we issued, we were forecasting this move, and we were saying that if the price could have reached $191.08, we would have seen more uptrend on the edge, because we were basically breaking up a potential T+2. And that's what happened. So basically, we went over $191.08. We were exactly doing this move, and we have seen definitely interesting uptrend. So therefore, the analysis was correct. Now we have to look at what has happened after. So we were saying that this was potentially a T+2. We had 8 bars below the top. And the ninth bar was the one which was breaking the high, and therefore binding all the moves to the uptrend or to the upside. Is this a T plus 2 or is this a T plus 1? Now, given that we have had this consistent retracement, we have had this retracement because also time was enough to close a T plus 3. So here we had 49 bars, which is already the minimum time to close a T plus 3. So therefore, either here we can see a new T plus 3 or even a new T plus 4, because we have reached a total duration of 133 bars. So we have the sufficient and necessary condition to begin a new upward cycle. Or this is really a T plus 2. Therefore, after this retracement, we will go back to the tops. We will go back to the tops quite soon. Now, in order to understand in which of the two situations we are, first of all, here we definitely have to update the chart by saying that this is a T plus 1. This is a T plus 1 because we have had already a duration of 18 days. And for a T plus 1, we cannot back to the tops for at least a T minus 1. So we need to stay below the stop or this I at $271 for at least 4 to 5 days. So the next week until Wednesday, we will not go back to the tops. If we go back to the tops, this will not be a T plus 1. But in terms of the total duration, we have now the condition to basically stay around this level of price. We have the situation in which it's true that we have enough bars to close a T plus 3, but we can also proceed and extend the duration of this T plus 3. We can go until, in the best case scenario, 89 bars. So the minimum and the maximum duration generally have low likelihood to happen. And of course, the more we go into a median duration, the more likelihood we have to close a cycle. Therefore, let's stick to the plan that we have here at T plus 2. And this plus 2 is formed by a T plus 1, then the second T plus 1, and then we go back to the tops. To close a T plus 2, to close a T plus 3, to close a T plus 4, and potentially to close even a T plus 5. So this is now what is happening on Tesla. We are in the situation where we need to close a T plus 5. And that's why we have had such harsh push to the upside. And here we have the beginning of a new T plus 5. So 2, as I said, also not in the last analysis, but a couple of analyses ago, we have had the condition to start a new T plus 5 and to close an upward T plus 5. Therefore, we had a couple of forces that were pushing towards one unique direction. And this is basically an excellent advantage over the technical analysis. Therefore, all was correct, despite the earnings was in red. So this means that earnings count not so much, because nobody was expecting first 40% upside, especially with red earnings, and then also a new push to the upside that was basically more than 60%, all in 20 days. So not even a month. Okay, so that's the plan. We are expecting more push to the upside, considering a framing where we have a T plus 2 and a second T plus 2 that can make a regular frame of a T plus 3. At the same point in time, regarding the downward cycle, here we have potentially the closing of a T plus 1, and we might have also the sufficient and necessary condition to close the first T plus 3 downward cycle. Therefore, once we have finished this, we can then proceed with a new T plus 3 and then another push or another impulse back to the upside. So that is what we can forecast on Tesla at the moment. Let's jump on Amazon. Also here on Amazon, in the last analysis that we issued, we were saying that we would have expected a retracement to close the second T plus 3, so the second 3-month cycle, and therefore the closing of even a T plus 4. This is exactly what happened in terms of downward cycles. Therefore, we have had a total duration for the first T plus 4 of 125 bars. Now we can update the chart first. And from this low that occurred on the 25 of April 2024, we have had the first T plus 2 after 25 bars, and now we are in the second T plus 2. Now let's update the chart, and let's remove also the arrows. As always, now we have to study the situation on a cyclical perspective on the upward cycles, because now we have to understand at which point in time we are. So in the last analysis, we were saying that time was stretched on Amazon, right? Because we were in a situation in which we had roughly, so we did an analysis roughly in April, so we were already at 294 bars. But we have seen, and we were saying that there was the possibility to start a new T plus 5 or at least a Nash retracement. And we had a first pull back to the downside, then up, then down, and then up again. So basically the trend, the uptrend has been keeping running. But now the time is suggesting us that we are basically out of a total duration of a T plus 5, 338 bars. So here we have 358 bars. So what is happening? So first of all, the trend is solid. But from a time perspective, we are really, really stretched. And if we gauge time from this T plus 3 until here, we had 76 bar. So with this pull to the downside, we develop a new T plus 3. And we develop also with this pull to the downside a T plus 2. And this T plus 3 has been divided in a first upward cycle of 20 bars, so a t plus 1, so like this, and then now a t plus 2, and this t plus 2 reached a duration of 39 bars out of 44. So here, so from a cyclical perspective, given that the earnings will be released on the 25th of July, and here we have potentially a new t plus 2. By the time of the earnings, we will reach a duration of roughly 15 bars. But we are basically at the end of a t plus 5. Now, if we look or zoom back in 2021, here we have had a t plus 6, so a B yearly cycle. This B yearly cycle has been divided in the first t plus 4, the second t plus 4, and the third t plus 4. So we have had a total duration of 301 days. Now we have another t plus 5. And this t plus 5, if we gauge the time until this top, has reached a total duration of 298 bars. So here we might have a bare tongue, which is an extension, an extra time, or a subcycle of 3 degrees less between two other cycles of a larger or a longer duration, which is a t plus 6. So this first t plus 6 plus an extra time of a t plus 3 can also develop a new t plus 6. That's why we might have this condition. But we can also consider that it's not given by fact that all the cycles have to start with a t plus 5. We might have also a new t plus 4, and because the trend is so solid, and because the HFT, so high frequencies trading, are buying like hell, then we could have not even a t plus 5 but a t plus 4 and then go back to the tops. But at least we need a cycle of a larger duration before proceeding to the uptrend, if they want to proceed to the uptrend. So we have now a dangerous situation in which we have finished regular time. We might be within a Bayer Tonga T plus 3, and the earnings will be a triggering point for a further downtrend to start a new T plus 5. And if we go back here and we break up the level at $166.32, then we will have a negative T plus 4. And this negative T plus 4 will allow also to close this 2 yearly cycle, which will be a first T plus 5 and a second T plus 5. So from a cyclical perspective, Amazon is really, really stretched. So we might already forecast, so we can forecast over the earnings that the earnings will be a triggering point for further downtrend. So now be careful. If we go back to the tops, then we will have the extension of this T plus 3, because if this is a Bayer tongue, then we can stretch the T plus 3 until 89 bars. So we have time also to do what? To begin eventually another T plus 2 or T plus 1 and go back to the tops. But for the time being, we have reached a total duration of 58 days. So the possibilities to have a further downtrend, statistically speaking, are 65%. And we have 45% chances to go back to the tops. But be really careful, because with the earnings and with the situational, cyclical situation, time situation, let's not be surprised if Amazon will start to retrace harshly. That's what we can focus on Amazon as for today. Let's jump to the next one. Here there is the chart on Apple. So on Apple, we have had the beginning of this T plus 5 with this low occurred on the 19th of April 2024, and we have had a really impressive uptrend. This uptrend has broken this high at $199.10. Therefore, we have a situation in which the new T plus 5 it's binded to the upside for the rest of its duration, which means that on Apple we can proceed the rally on the uptrend at least until Tuesday, 17th of September 2024. Now, the situation looks the following. So this low, this high was important because here we had a T plus 3 upward cycle, and now this T plus 3 upward cycle has reached a total duration of 77 bar. We can stretch this duration up to 89 bars, which means that we can proceed further to extend the rally until Friday, 26th of July 2024. Also because here we have at the first T plus 2, the second T plus 2, and now here we have the beginning of another T plus 2. So this T plus 2 has reached a duration of 19 bars. So basically next week we forecast again another trend to the upside, or at least a push to the upside to go higher to this high at $233.08. Once this will be done, bear in mind that this T plus 3 will be completed. Therefore, we can start having a retracement. Okay, so bear in mind that after towards the end of the month, then we will start seeing a retracement. Okay, now the earnings will be released when the 1st of August. So if we will start having a retracement, and if we will start to go down this low, for example, at $225.77, the earnings can trigger more downtrend. But let's not move too far away. So uh, the important thing here on Apple is that the next week we have more probabilities to see the prosecution of the rally rather than concerning retracement. But be careful, because we have the sufficient necessary condition to close even at T plus 4. Now we have 142 bars. So therefore the probabilities as of let's calculate also from the candle of Friday. 144 bars. So on Friday or on Monday morning, we have basically 85% possibilities to start going down, and 15% possibility to go up. But we also know that if that this is a T plus 1, T plus 2, will ideally will have to continue to further extend the rally for another week at least, because now we have 20 bars. We need other 4 days with a top. So until 18th of July, we will need to close the T+2 and then start eventually a retracement. So in terms of, I repeat, so in terms of T+4 per se, 15% possibilities to go up, 85% to go down. But because we have this sub-cycle that was already binded towards the upside, and we have 20 days out of 24, for the next week, we have more possibilities to continue to the upside rather than the downside. But then be careful after the 20th of July. So by end of the month, be aware that we might have another retracement. And this retracement will allow to close a T+3. And in order to close a T+3, we need a weekly negative downward cycle. So that's the situation on Apple. Let's jump to the next one. On Nvidia, the natural question is that the right time to buy? So how long can the rally continue? And by looking at this video, you will find out more. And I hope this will be useful insights to correctly manage your positions. So first of all, on Nvidia, the situation is quite straightforward. Here we had the top in which we had the beginning of a T+5. This T+5 now, this yearly upward cycle has reached a total duration of 206 days if we consider the top made on the 19th of June. And if we consider the last candle on Friday, 222 bars. So basically, we have reached mostly a median duration to have a T+5 eventually, or we can still proceed the rally for, in the best case scenario, 338 days. So we can extend the rally until Christmas, because this is 337, it's 23, 24. So we can extend the rally until Christmas. So that's the situation. Now, if we look more at the sub-cycles, here we have a first 3-month cycle, second 3-month cycle that gave a T+4, 6-month cycle. We have had also a symmetrical situation on the downward cycle. So the T+4 has reached or has made the first T+3, and now we are basically see the beginning of another T+3. So if this second T+4 will follow the same setting of the first, then we expect to go back to the tops. And we expect to go back to the tops within a range of time that is at least 39 bars. So between the 28th of August and eventually the 24th of October. So we have had in this situation the beginning of a T+3, which has been which gave a T+1. Now we are on the second T+1, but by following a regular scheme, we forecast to go back to the tops. And then once we will go back to the top, then be careful that, let's say from September onwards, then Nvidia can see a new retracement. But here the situation is quite straightforward. We forecast to have more uptrend and extend the rally rather than downtrend, because this trend is really solid. Here we are in a consolidation phase due to the fact that we have a T+3, but all this structure or all this upward cycle has basically additional time, and we are just at 222 bars to proceed and extend the rally. It's not given by fact that the climb will be as it was before, so something like this, but it can be also a steady state situation and then a top which can go over, so that can break this $140.76 and then further down. This is something that we cannot forecast, of course. It depends on how much buckets of stocks the HFT will buy in a window of time. So we might have a strong uptrend like before, or we can have a steady state situation. But at the end, we will need, when the cycle will be closed, a top which needs to be higher than this $140, and will be sufficient even 141. So we need to go higher 140.76, and then we can start having another retracement. But of course, time will tell us if this will be a neutral cycle or will be a really positive cycle. That's the situation we have on Nvidia. Let's jump. So this is the chart of Meta. So Meta started an upward yearly cycle here on this high at $325, which was made on Friday, 28th of July, 2023. Now, the time elapsed from this top until the candles of Friday has been 241 days. We have a condition in which we have the necessary and sufficient condition for the beginning of a T+5, but with this top, we have a new T+4. And considering the retracement that we had, and considering how wide this is, now this structure is basically attached to this first one. So the second one, what we forecast is to have the first T+3, then the beginning of another T+3, and then return onto back to the tops, absolute tops. So here we need a bit of time, another week, in which the price cannot go over this top at $542.81. We need also to close T+3 as well. We have at the first T+2, and now we need a return, or we need to have a weekly downward cycle to close a T+3. We have reached a duration of 28 bars. We have to see now if we will have next week a cycle of this kind and then a return into the support area at $492. This will allow to close decently at T+3, or if we will have a cycle that will turn rapidly into a -1, and then further a new T+3 that will push the price back to the tops. So the earnings here can be a triggering point for to begin a new T+3. And this new T+3 has to go over this top and this top to allow what? The closing of a T+4, and therefore the closing of this T+5. This is the most likelihood way that we can forecast at the moment. Even if, as for some other Magnificent Seven stocks, bear in mind that we have the sufficient and necessary condition to close at T+5. Therefore, if they want to start a new T+5 in the light of the earnings, then they can push the price further back down until to the point of the moving average at 200. Okay. But for the time being, this is what we can foresee. So a return back to the tops to close the T+3 and return back to the tops can come in a window of time between 49 bars. So therefore, between 16th of September up to 11 of November. So that's the situation on Meta. Let's jump to Google, as is the last one.